Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta Data Exchange. Coming Saturday, I'm conducting a workshop for trading in US market. Those who are interested may contact our office. There are not many people, so you will get a lot of individual attention. And also we will form a group so to help you to trade throughout your life. And of course, that may not come free, that's a different story. Yesterday, the markets recovered more than 200 points from day's low. And now, today, it is indicating a gap up of another 100, 120 points. Why gap up? And nobody knows. So this is how the market operates. What has actually changed between yesterday to today? Did the FIAs turn net buyers? No. And did the US market did very well? No. Yesterday Nasdaq was down, S&P 500 was slightly in green, and then Dow was also in green. Nasdaq was down because of Oracle result was bad, so it fell about 15%, and then Nvidia and other chip stocks fell. So that's a different story. So US markets, same thing. FIA selling, same thing. There is nothing has changed in India, but you look, sometimes for no reason it gaps down 100 point, 150 point. For no reason it gaps up 100 point, 150 point. So it's very difficult in market to understand. But that is where the people tend to focus a little bit on technicals. So I will show you one technical, and you see here this is a daily chart, right? So this is November 11th, this is November 12th. There was a big gap up, and see the gap up, and that day the Nifty closed at 25,700. The next day it's open about 825, 837. So it's almost 150 point gap up. And see 2, 4, 6, 8, 10, 12, 14, 16, 18, 20 trading sessions later, and look at this day's low, right? So this day's low, okay, no, still this gap was not filled. So this level has to be touched in order for the gap to be filled. I think that day post-market I reported. And the next day also it did not break. But what happened yesterday? So look at yesterday's low. So this is yesterday's low, 25,693. So that has actually filled the gap. Not only this one level was touched, even the closing level was exactly touched. The market took support exactly there, and then market made a big recovery. And what has happened in the last few days? 3 days of fall, one big green candle. And 5 days of fall, two big green candle. 3 days of fall, one big green candle. I think today 100 point is going to gap up. So that may be somewhere here. Right? So that means, so this level will also be taken out today. So, so sometimes, these technicals work so perfectly. So after 21 trading sessions, a Nifty came down and exactly closed the gap, and then market is reversing. So this is called gap filling exercise. But what can we understand in this gap filling exercise? Now we can assume that yesterday's low is the support for the market. But this gap filling exercise does not say anything about the resistance. And so resistance, it's going to be at, all-time high, around 26,300. So we can expect market to trade between 25,700 and 26,300. And some of the stocks are too volatile. And look at the BSE. Yesterday I spoke. 5% fall day before yesterday, 5% short up yesterday. And look at the IEX also. I think it's fell 4-5% and then shot up 4-5%. MCX it's extraordinarily volatile. It keeps going higher, keeps coming down, all over the places. And forget about that, even the stocks like TCS. I think TCS recovered about 40 points yesterday from day's low to day's high. So markets can be volatile, and probably yesterday maybe because of this Sensex expiry, but today it is indicating a 100-point gap up. So number one, the bulls are trying to win back the battle. Now, at the opening itself, the Nifty spot is likely to be about 26,000. Of course, as I always say, 26,000 is just a psychological number, so that has no technical relevance. So the technically market, earlier I told you the first trading session's low was 25,850 and that should not be broken, and that was broken. Then the next support at 25,700, around there, that is where the gap filling exercise. So that gap has also been filled, and then market now reversed firmly, right? So all this happening, on its own. There is no global cues, nothing, right? For the last few months, forget about last few months, even last 1 year, our market is not following the global cues. So we are on a separate, different trajectory. And however, not everything is very bullish. Number one, the India VIX is already at 10.4. How much more it can fall? Right? I think, below 10.5 is already a multi-year low. So the probability of, VIX spiking in the near future is very high. So the market can make some violent move. So that is one place where we have to be very, very caution. The second one, of course, FIA selling. There was not even a single trading session where FIA's buyers in December series, except the first trading session. And December, I think, so far 2.5 weeks are over. Only one trading session, the first trading session, they were net buyers. And after that, every single trading session, they were net sellers. So maybe I'll come out with a video about this FIA selling, a separate video. So these are all the places to be cautious. And also today, because of Oracle, IT stocks may not do very well. Or who knows, even IT stocks may come under some kind of a slight selling pressure also. So that possibility is also there. So therefore, this gap up, markets may gap up, may sustain, may consolidate, or may fall a little bit. The probability of market going higher after the gap up. If there is any big positive news, market gap up, it can continue to go higher. Say, for example, on May 12th, Indo-Pakistan ceasefire news came, Nifty gap up 400 point. After gap up of 400 point, it rallied another 400 point. Okay, but that was because of the news. But today there is no news, and market is just gapping up, right? So this all like to do with the positioning in F&O market, as I told you yesterday evening, it's all about who is a big rowdy, bulls or bears. So otherwise, markets, probability of consolidation is very high. So I would say if Nifty closes above 26,000 by the end of the day, that will be a very big win for bulls. And stock specific, as usual, keep watching for HDFC Bank, ICICI Bank. ICICI Bank is underperforming. If that start outperforming, the Bank Nifty can inch towards 60,000 once again. So all kinds of things. And, like auto stocks will be in focus. So other things also same thing. So the broader picture, the main story is still remains the same. Banking and autos doing well, IT trying to recover, FMCG and pharma doing very badly. So that's a broader picture. There is no change in the broader picture. So today Nifty surely will take support at yesterday's low. I don't think that yesterday's low can be retested, but no, the high can be, up to 26,100, right? So we can expect Nifty to trade between 25,700 and 26,100, but that looks crazy because this is a 400 point range, and our markets do not make more than 200 point usually, right? So let us see what is going to happen today. Hope you enjoyed watching this video. Thank you for watching.